Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here on Monday, April 28th with some commentary here in the energy markets. So let's get started here. So far, fairly quiet day most of the morning here and afternoon. Currently, June oil, we're up roughly about 20 cents, trading around $100.80 a barrel. We're seeing the Brent quite a bit weaker, though. That's off about $1.50 at around 108.08. So we've seen that spread kind of narrow in. Nat gas certainly bucking the trend there. We're up about 12 cents here, a little over 2.5% jump. Well, we got the complex weaker. RBOB's off about 4.25. Heat's off about 4 cents. So certainly seeing the complex coming under some pressure. I want to get started here a little bit. Let's kind of do a recap here last week for a second here. Monday, both of my posts last week, I talked about the price action we saw last Monday, which was an inside day. We hit a high that Monday of $100, well, actually $103.83 a barrel. By Friday, of course, we kind of saw the market kind of selling off throughout most of the week. We hit a low there of $100.48, closing the week out there at around $100.60. So really saw a weaker tone there all week. Now today, we did see prices dip just a little lower than Friday's low. We got down to $100.33 a barrel. So far, price action here today, we're seeing a lower low and a lower high. So I still think that the bears are in control of this market. One thing I think is important to note, we did touch down here, it looks like here today, right about on the 50-day moving average. And I think, really what you want to do is pull up a chart there and take a look at it, apply the 50-day moving average, apply the 200-day moving average. I think that, the market, the way the market's been kind of climbing up, we've been coming down and touching on that 50-day moving average here. I think we're at a real crucial level. In my opinion, and if the market should happen to break in here, we could be starting to target the 200-day moving average, which is ultimately where I think the market's going to go. Now, we are seeing some of the fear premium come out of the market here with the situation here with Russia and Ukraine. Things, here have been heating up there a little bit. Here in the U.S., they have talked about potential additional sanctions there. We'll see what impact, if any, that really has on anything that's going on over there. But I think fear premium has come out of the market. I still think there's additional fear premium to come out of the market. But the biggest thing I think affecting the market is obviously something I've talked about in a lot of these posts, and that is our current supply situation here in the U.S., which appears to be more than ample. Also, I think worth noting is take a look at the equity situation. S&P 500 here today was quite a bit weaker, and we saw a breakdown, saw that take out Friday's lows. We saw a lot of weakness there. So if we continue to see weakness on the equities front, and we'll take a look for API numbers out here tomorrow and the crude, and then of course the EIA numbers coming out on Wednesday. If we see another build in stockpiles there, and I personally think that we will, really could be helping set this market up for additional downside action. So give me a call, shoot me an email. I've got some ideas on how you can position yourself. Numbers there on the screen, emails there on the screen. Look forward to speaking with you soon.
Futures and options on futures may involve substantial risk and may not be suitable for all investors.